Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market update for this Wednesday, the 19th of July, 2017, about 3:40 p.m. Central Daylight Time. Okay, healthcare fails, and you know what the marketplace is telling you? So what? New highs in 3 of the 4 indices. That's pretty powerful stuff. People say this president doesn't do good, they don't care, but I was just watching Fox TV on people as to how they feel about themselves. And they feel pretty good because the economy, in their opinion, not mine, in their opinion, is doing good. And that's transferring right into higher stock prices all the way through. So no matter what you hear along the line, people aren't feeling bad about these markets. And I think that is the important thing that we have to remember. A bit of a bid coming into crude and the rebob, and I would expect that anyways going into the OPEC meeting next week. What are they going to do? Come out and say that we're falling apart and we're disbanding, we're not going to continue with the cuts? Now, what you're going to hear are rumors, and that's what's happening, that maybe unilaterally, just on their own, Saudi Arabia is going to cut another 1 million barrels a day. Why not? They got a Aramco deal coming pretty soon. They need this market. They can cut that and make it up in spades with a good float on the Aramco. So there's many things that are going on right here. Grain markets today, you have the corn and the beans up because we're at that point in time where you need either to get that rain, that's the $1 million rain as we call it in the business, and makes the crop, or not enough of it and you get the $1 billion loss. And that is something that we call in the industry the disaster. Which way does it go? Metals marking time, the dollar index up a bit at the expense of the euro today, and the yen just sitting steady because we're going to wake up in the morning and see what? We're going to get the European Central Bank and the Bank of Japan monetary policies. The market expects no change. I think the market was hoping that you'd get something from Draghi in a statement. I don't think you're going to, in terms of him tipping his hand what they're going to do or not going to do come September. It's a bit too soon. He might allude to something at the Jackson Hole Central Bank meters that's coming up in August. Even that's questionable. So we'll see just what goes on there. But when I take a look at the stock indices, the S&P, this is a new all-time high, folks. So you would think, everything falls apart this week, no health care bill, we're hearing no tax bill from some people, new all-time high. I'm not buying all of that. So there's obviously something different going on. The market telling you, look at the story on a daily bar chart. The other chart's your weekly chart. This is your daily bar. New all-time high in that. Trend, higher lows, higher highs. Now, this is what's important. On this day, which was yesterday, right? Today's Wednesday. The market had an outside day down. You know what I tell you? If you take out the high of an outside day down, the very next day or the day after that, you've created what I term to be a bear trap. And that's just what happened today, and away you go. I mean, that's one of the things I teach in my charting course and something you might want to keep in the back of your mind. So now that the market's over the 18-day average, where might the market go to run into its first resistance point? Well, put up the Bollinger Band. You've been running it, so it's not like it's far away, and that's what the market is basically doing. And you might even develop an embedded reading. Embedded occurs when the K and the D lines, the red and the blue, go sideways over 80 for several days in a row or more. You're setting that up. You're not there yet. If you look at the market today, both numbers over. Were they over on Monday? No. They were on Tuesday, and they were today. Got to go through another day, which often they don't embed. So it wouldn't surprise me if we get some profit taking, but it wouldn't matter. It's profit taking. You're just overbought. There's nothing bearish on this chart is the important thing to grasp. When you come to the Dow, it didn't join the parade today. But what about its embedded reading? Well, both numbers are over 80, and you can see them right through here. Both over 80, both over 80 on Monday. Went too far, but that's Monday, Tuesday, and today. you got your embedded reading. So pullbacks in this market qualify as what? That the pros will probably buy until the red line closes under 80. NASDAQ just overbought, new all-time high, going right up into, it's not quite there, it's 9 points away at this time from today's high, to the upper Bollinger Band again, and the Russell right up to that high. You have to give the Bollinger Bands credit. Look at how often the market stops against them, be it the top or the bottom side. This market overbought too. So we're getting into a little rich area, but if you think that the market is looking at the lack of the health care bill to go through and saying, oh, that's a big negative, and the pundits will say, nah, now Trump can't get anything passed on his agenda, well, maybe the market doesn't need anything passed, although I think that sooner rather than later he'll get things passed. How's that? It's 6 months, he can't get anything done. He got a Supreme Court justice in and a lot of rescinding of orders. He's doing away with a lot of unnecessary regulation at this point, and I am not sitting here as his cheerleader. I'm talking fact. That's what it is. Are we divided in Congress? Boy, you couldn't believe how divided. I thought we were divided under Obama. This is a whole nother level that we've got, but it's amazing, and yet the market continues to go higher. In the VIX, now if we take a look at yesterday's action, we had an outside day up and we took out that low today. If the market is going to truly follow form, it often makes a run for the next major number, and in this case it'd be 904, which is the lower Bollinger Band. You are embedded. I have pointed out to you that recently the embedded readings haven't carried the markets very far. That doesn't mean that they don't keep the market under pressure when they're there. It's just that you haven't fallen very far in this market, and I guess that to get down to 904, you're really saying, can the market fall 7 or 8%? That's why this is going on. As the markets come down to these numbers, to get down to some of these other levels, you're now at 10% numbers almost. That's why I think this is going on. In the T-bonds, you still have a bullish situation. You've got higher lows, higher highs, and you closed over the 18-day average. So this market still looks good. What does that say? Well, it says that the Fed's still not getting the action that they need. That's what the market's saying, to give you that big series of run on interest rates. You held up today in the 10-year notes, but if you look at the 10 and the 5, you're going to see they backed off a little today. You are overbought. I think that's what's going on here. The 5 did the same thing. Dollar index, embedded reading, lower highs, lower lows under the 18-day average. Now it's starting to ride that lower Bollinger Band. There's nothing that I see that is bullish on this chart. That doesn't mean a surprise can't happen, but I don't see anything friendly on that chart. In the euro currency, you got up to the upper Bollinger Band yesterday, and you're backing away going into a central bank meeting. Duh. You don't think the pros took some money off the table there? If you're a broker, you're probably telling your client, listen, blah, blah, do you want to go through that report? And so you're getting some of that. Still have the embedded reading. British pound. You're now getting into the meat of Brexit. It's really going to start picking up. Hard to say what's going to happen. You have no trend. You've got a swing line that's got a higher high and a lower low. You got a market that's overbought trying to work it off, and you have some bias in the market that is to the upside. Very difficult chart. Japanese yen, I'm going to tell you what I always say. Same thing. You got the 100-day average here. You didn't quite hit it. I would have liked that. It would have been textbook where I think the pros would have taken some money off the table. And then you got the next layer at the upper Bollinger Band. You're overbought going into a central bank meeting, and you're stretched out in price. Let you decide what to do. WTI crude. Now you're getting overbought, and you're going to start hitting layers of resistance. The first layer comes in at 47.77, which is the upper Bollinger Band, and that extends to 49.19. So I think between here and that $50 range is where you're going to see the market starts to see a bit of a struggle. Can it advance here in front of OPEC and so on? Sure. Can it advance if Saudi Arabia says, hey, we're going to cut 1 million barrels a day on our own out of production? It certainly could. So the danger here is there's more things that could happen bullish going into an OPEC meeting than not bullish. That is the danger of the market. Gasoline, bullish. Right into the 100-day average, the upper Bollinger Band with an embedded reading. You're in your resistance point. I think pros will take money off the table right here. But it's the same philosophy. If crude production is cut back or exports are cut back in some manner and price stability goes a bit higher or price pressure moves up a little, that helps that. But what we're really seeing in the U.S. is people are driving. It's summer. It was inevitable it would happen. It was a question of when it was going to happen. And in the nat gas, you get warm weather. It's summer. We finally got it in many parts of the country. You know, it was out west for the longest period. Now it's at last getting here. The Midwest is hot and muggy. You're going to get that out east. So the demand for air conditioning is coming up, and that's how you look at those events. You put it all together, and what you got to have is information. And what we do at the Linn Group is we write our own reports. We have a whole staff of writers in this company, and they really churn out market research. A lot of these people do nothing but research. Trade the grains at this time of the year. Go to any firm you want. I think our information's better. I think you'll find it so in-depth. Who's doing what in options, where they're at in the weather markets, what are they doing, what are we seeing in the spread opportunities, where's it all at? Well, then you add that to the financial markets and so on as we're going to get going again in the fall and so on. You want to really get this info. And you can choose the categories you want. You don't have to get it all. You only get a limited trial on it. So it's not as though it's going to keep coming, but you owe it to yourself to try it. How do you get this free offer? It's really simple. You're going to give us a call at 866-973-2077. You can go to our website at www.iraepstein.com. You can click up here if you'd like. And all you need to do is you'll see that icon, the form will appear, or under us. It says click here on many websites for Ira's free offerings. Do so, and away you go. I'm Ira Epstein. Thanks for watching, and I will see you all tomorrow.